Ladies and gentlemen, welcome to the overview and corporate update of Regenx Tech. This is Trevor Brucato with RB Milestone Group, the US-based investor relations firm. Regenx is listed in Canada on the CSE under the symbol RGX, and in the US on the OTCQB under the symbol RGXTF. I'm pleased to have with me today, for the first time, the entire team behind Regenx, including management and the members of the operations and innovations teams, in order to provide further color on Regenx's recent announcements and current operations. Following the prepared remarks, we'll be addressing questions that have been submitted during the registration process and those submitted live. If you are interested in asking a question, you can submit them in the Zoom Q&A module. Please note this presentation is being recorded today, September 11th, 2024, and will be made available on the company's website at regenx.tech. Please note today's presentation may contain forward-looking statements that are subject to risks and uncertainties that may be out of Regenx's control and should not be construed as a recommendation or solicitation to buy or sell any security. Moreover, due to regulations, Regenx is limited in its ability to disclose additional forward-looking financial information. For the company's full disclaimer, please visit their website at regenx.tech, and you can also see the full disclaimer on the screen at the moment. Lastly, RB Milestone is not a registered investment advisor or broker-dealer. For more information on us, please visit rbmilestone.com. And now it is my pleasure to turn it over to Regenx's CEO, Don Weatherby. Don, stage is yours.
Thank you, Trevor. I'd like to begin by just hitting on some of the highlights that we've had over the last few months. After the rights offering, we began purchasing feedstock and have processed over 32,000 pounds of that feedstock. From that, we sent black powder to the Heraeus refinery, with the first shipment being over 30 ounces here in August. As we were ramping up, we did encounter wear issues at the increased rate that caused us to have to shut down our main reactors. But I'd like to reiterate the most important parts. Our process works, our chemistry works. We are moving forward, and we are excited by what we see. What I'd like to do today is introduce you guys to our complete team and allow you to hear from each of them on some areas that they have been working on. Our team includes Rick Purdy, our President of USA Operations, Emily Richardson, our Chief Financial Officer, Fabricio Maya, our Director of R&D, who leads up our innovations team, and Bob Fair, our newest appointee, who's our VP Operations, who leads up our operations team. We are all excited to be part of this organization, and I'm going to turn it over to Bob here to give you an operations update.
Good morning, everyone. As Don said, my name is Bob Fair. I recently joined Regenx in July. Prior to that, I'd spent 26 years in this precious metals industry. The last 5 was with Heraeus in a sales and somewhat of an operations support role. The previous 21 years, I was with Johnson Matthey. So 18 of those years at Johnson Matthey was in operations. And so, you know, JM, I'm not sure if you're all familiar with Johnson Matthey and Heraeus, but they're 2 of the biggest players in this precious metals recycling industry. As an added note, which is a great bonus to this what we're doing right now, is for 1 year in college at Johnson Matthey, I actually worked in the wet refinery, actually doing some of these processes, and throughout my career worked in the plant, running these processes, running this equipment. So last 6 years, I've been in sales. Full disclosure, I've been speaking for several years. I never wanted to go back into operations again. So when Regenx reached out to me and said, hey, would you like to come join this team? My initial thoughts were, do I really want to go back into an operations type capacity? After getting to meet this great team, understand the opportunity that we have here, I decided it made sense to join. So, you know, it's a great group of people here. As Don said in his opening remarks, the chemistry works, the process works, the business model is there, and we're just continuing to work through the operational components and the equipment. as part of this webinar today, we really want to make sure we start to restore your confidence in us. We've heard we've seen your emails, we've received your feedback, we have your comments, and we really know that there's been times we've been overly optimistic in where we're going to be in the business at this point, and we already have a plan in place to start to work towards, getting all of that back on track. As an added note to my career experience, in 2008, Johnson Matthey asked me to move to Tennessee to run one of their operations that they had purchased for a little over $40 million a few years earlier. Unfortunately, that operation wasn't overly profitable. It was only making, about $1 million a year. At the end of my time there, because I decided to move into more of a sales role after 8 years, we had recovered the full cost of that initial investment of the acquisition, and we were at an $8.5 million profit for that last year. So we're going to take that same approach here with Regenx. We're going to look at all those pieces, buying the feedstock at the right prices, buying the feedstock with the right amount of metal in it, looking at process efficiencies, looking at process optimization, understanding the back end of the business to make sure that we're selling, making the most profit on the product that we sell. So we really want to make sure that we're taking that approach and that we're sharing that with you. We're going to look at bottlenecks. We're going to look at process efficiencies. We're looking at the labor right now. So I know there's some concerns about, when we're back up and running and how smooth that's going to be. We're also looking at labor from a cost perspective because there were several questions about, our cash flow and timing. So I just want to make sure I share a little bit of excitement today. I know I just want to get to those points, but I'm really looking forward to what this team is going to do. I'm really looking forward to what we can build in this business. I'm glad to be part of this team. And to be honest, I left a role at Heraeus that I really enjoyed. I was enjoying the position. I was enjoying what I was doing. The company treated me right. There was no plans to leave. But I was really inspired by what the Regenx team is doing here. So I want to give you a little bit background on myself, and then we can jump a little bit more into the short-term plans, long-term plans. Initial perceptions, I already kind of talked about that. Unfortunately, we are seeing some wear issues in our glass line systems. We already have a plan in place to start running short-term, so we'll be continuing to process some black powder in the next couple of weeks again. So that's material that we can sell into the marketplace. And then long-term, this is with equipment that we can get quickly off the shelf. And then long-term, we'll be purchasing the longer lead time items for our business. Can we go to the next slide? So I know some of you have seen this before, these particular slides. Most of you understand the initial feedstock purchases, the Davis Recycling initial processing, but we just wanted to go a little more in depth into this today. So we do receive these materials from Davis. They mill that material and get in a position for us to leach. So this whole process is really broken down into 2 key steps. So you have the leaching step of the process where we're removing the precious metals from the feedstock. We then have to separate those 2 things, the feedstock that no longer contains the precious metals and the solution. We then take that solution and we precipitate it into our black powder concentrate. At that point, that black powder concentrate needs to be sold on to these primary refiners, the companies like Johnson Matthey and Heraeus. Our product is pretty close to pure, but it still needs further purification to be able to be sold into the market and make it a saleable product. And that takes time. So we also really wanted to make sure that we shared a better understanding today of the timing. Once we even finish our process, we need to send this black powder out. It has shipping time, and the third-party refiners have time to process it. They need to purify this back into their step, into the pure precious platinum and palladium. Once we get to that step, that's when we're getting paid for these materials. And we'll dig deeper into this into the question and answer section later today. But I'm definitely looking forward to working with everyone. I'm looking forward to this experience. And we're going to get this company on track. We're going to be, cash flow positive and the ultimate goal is profitability, right? It's running a profitable business, and that's what we're here to do. I now want to hand it off to Fabrizio to talk more about the R&D and innovation side.
Thank you, Bob. Hello, everyone. I'm glad to be here today with you. First of all, I want to apologize for my strong Latin accent. Just a quick introduction here. I am a hydrometallurgical engineer. I have 24 years experience in hydrometallurgical and chemical process, mainly in precious metals, iron ore, cassiterite, and a little bit of copper as well. Mostly in Brazil, but also in South Africa and Chile a little bit. I came to Canada in 2016 with my family. I concluded my master's degree in UBC in 2018. In the end of 2019, I joined Regenx into this very exciting, amazing and innovative project, which is not actually a project anymore, because we crossed the borderline of being a project to an operation. Today, I'm gonna talk a little bit about the laboratory's structure we have to provide technical support to Module 1 operation. As Don mentioned before, the process works, the chemistry works. In this slide, you can see the leaching and precipitation results. They are all over 95%. In reality, they are close to 100%, 99, 97%, 98. They are all great numbers. They are all great numbers. As you may know, a production line requires data analysis. If you don't measure, you don't manage. Regenx operates 2 labs, one in Tennessee and another one in Vancouver. Tennessee lab does what we call short-term analysis, which provides feedback for Module 1 operation. Most importantly, Tennessee lab, we do the quality control for the final product. And again, providing feedback to the operational team. Vancouver lab. On the other hand, in Vancouver lab, we enhance the existing technology, as well as we assess expansion opportunities. In the picture here, you can see the ICP analytical equipment. We have 2 ICPs running in Tennessee, one in Tennessee, another one in Vancouver. ICP is one of the most important equipment to analyze samples. Both teams, Tennessee and Vancouver, they work together to provide the best technical support for Module 1 for pursuing operational excellence. That's the main core of the labs. Competitive landscape. In this slide here, I want to highlight that we are ahead of the competitors. Regenx is now in operation. We are not dealing with lab research, focus on lab research anymore. We, like Bob said, we acknowledge the challenge. Problems happen in an operation of this magnitude. But if I could leave a message to you today here, I would say we know how to do it. We know how to do it, and we are going to make it happen, indeed. Thank you very much. I will hand over to Rick Purdy right now.
Thanks, Fabricio. Just wanted to give a little bit of background on myself as well here. I'm a serial entrepreneur. I've been involved in many different projects in my career. A couple to mention is we started in A to Z project to commercialize indoor aquaponic vertical farming in Alberta years ago, and that was a success. And a couple other projects that I've been involved with. Some of my experience has been in the oil and gas technology with flow gas meters, and as well as in the nutraceutical natural health product industry. And I have some real estate commercial development background as well. So when Regenx approached me as far as moving my family down here to Tennessee a few years ago, being an investor and involved as a director of the company for many years, I thought it'd be an awesome opportunity to expand more down into in this industry, in a new industry, and it was very exciting to me to do so. So what I'm excited about now that we have Bob on board in particular, we have an incredible team. All of our members are awesome at what they do, but we were missing, we had a gap in our skill set, and that was a Bob gap. Somebody from the actual industry. We were never able to attract anybody until the time that we actually were commercial, we proved our technology, and we got there and we were able to secure Bob. So we're very excited about having him on the team with us. Bob is heading up the operations, and I'm now going to focus on my core strength, which is building strong relationships in the industry and building trust. And that's where we're going to talk about the feedstock and the material that we have that we're processing in our plant, and the next steps on that. Next slide. Thank you. Yeah, I just wanted to show the supply chain currently. As you see in the chart here, it has the small gatherers on the bottom, and that's many guys all around North America. They might get 1 to 10 catalytic converters and gather them and sell them. The small scrap yards, they're 100, cats. Mid-large volume, 1,000. Regional yards, 5,000. Large shops such as Davis Recycling, tens of thousands. And then you have the smelters. That's basically the supply chain as we see it here today. What our strategy going forward, and I'm working hand in hand with Davis, is to skip the middleman. And we have an incredible relationship we developed with EPF Alternatives as an example. And this is one of many type of companies out there that are the straight to source material, and there's no middleman. And that's the opportunity for us because there's more margin in it for both parties, them and us. And we build a stronger direct relationship with a company like DPF, which is coming along very well. We're excited to work with them. As you can see, the blue dots there, that's their existing locations. And the green dots are their ones coming on board. They have over 100 locations right now, and they're moving on to 200 locations very fast. So very excited to work with DPF Alternatives as an example. That's our skip the middleman strategy. And the next slide. Yeah, and we have a potential OEM pipeline here. I wanted to show the OEMs, they do a lot of recalls. They have a lot of material that they work direct with, the refiners and so on. We can be a solution as a secondary refinery, so we're developing those potential OEMs and those relationships through our network right now, and quite excited about where that's going. And the last but not least, we have a smelter tolling option. That's where we take companies like these on the screen here, their material, and we simplify it for them. We become a secondary refinery, we take their material, process it, run it, and return the metals to them, and then they deal directly with their customers. So it's an awesome opportunity for us to get cash flow and get volume of material and work as a collaborator side by side with the smelters, not a competitor. Yeah, so that's pretty much what I'm working on right now. I'm very excited about it, guys. Thank you so much for taking some time to listen today, and we appreciate it. And I'll send it off to Emily.
Good morning, everybody. I'm Emily, and I'm pleased to introduce myself as the CFO of Regenx. I'm a CPA, and I have over 15 years in the accounting and finance industry. I've worked in varying industries such as construction, oil and gas, instructional roles, as well as public practice. So we announced last week that we sent our first batch of final product to the global refiner Piraeus. This isn't just an important step, but it's an exciting milestone as we have now closed the loop on the Regenx system. Now that we are finally generating revenue, we have several doors open to us in terms of financing options in order to expand. Firstly, banks are willing to offer financing to us using our accounts receivable as security. The next program we are really excited about is offered by the USDA. This is a rural business investment program where the USDA guarantees up to 80% of a loan that Regenx would receive from a lender. We are actively working on this opportunity as we speak. There are other future potential opportunities with the USDA, including grants for solar energy. We have also applied for a loan with the US Department of Energy. This is an energy infrastructure reinvestment program based on the PGMs, or critical minerals, that we are recovering. Platinum and palladium are considered critical minerals by the US government. Though any government is slow moving on programs like this, we are confident that our clean process versus smelters to recover these critical minerals will favor us in approving for these funds. We have also applied for funding with the Canadian National Research Council. This is an industry research assistance program that would reimburse our Vancouver lab on project-specific costs. Obviously, while all of the above are being worked on, we are actively working with our current banks as well as trying to generate as much final product to sell to generate revenue. Now, it's important to note that as a publicly traded company, we have several restraints on our projections and what we are allowed to tell the public. Canadian National Instrument 51-102 discusses continuous disclosure obligations. In particular, Regenx cannot release any specific forward-looking information or projections as we are still in the very early stages of production. We need to first have publicly disclosable information for any projections presented at this time. As we move further into revenue production, we will have more historical information to provide us with some guidance. Until this time, we are restricted. Now, with our head office being in Alberta, many of our investors may question, and do question, why other companies in the minerals and oil and gas industries can share this information while we can't. This is because other national instruments gives them an exemption. Public companies in those industries have consultants that offer third-party projections based on reserve calculations. Unfortunately, Regenx is not exempt. So when we are asked lots of questions about margins, future profit, or investment returns, we are restricted from answering until our public financial statements are released. I would like to now pass it back over to Don, where he can talk about our strategic direction.
Thank you, everybody. I hope you've enjoyed meeting our team. I'm excited that they are the team that's helping us move forward. To give you some understanding of what our strategic direction is, I'd like to say, here's the goal, our vision. Our vision and what we are working toward is being driven by becoming a profitable operational company, and we're well on our way to doing that. Some of the initiatives that we're taking on, how are we getting there? Our operational initiatives are based around revenue generation, generate cash from the production of ounces of PGM, and then have module 1 operating capacity. This leads into profitability. To increase profitability, we will secure more favorable feedstock, which is what Rick is working on, and increased operational efficiency, which is what Bob's working on. With that in place, that allows us to look at expansion opportunity to bring on additional modules and pursue secondary locations. That's the operational piece that we're moving forward on. Strategically, we're looking at a few initiatives. Corporate marketing plan. The corporate marketing plan is being developed to increase demand in the US marketplace and an increased demand from investors, institutions. These pieces are what we need to drive further buying of our stock. To also move forward, we need to secure additional funding. We're working towards working capital funding and expansion capital funding, and those are what Emily discussed. The next pillar of what we would do is we are looking at strategic opportunities, whether or not that will come through mergers or acquisitions, or additionally through foreign license options. All these items is how we are strategically going to move this company forward. Just as a little reminder, what our share structure is, we have just under 400 million shares outstanding currently, an additional 18 million in warrants with a weighted average price of 11 cents, 26 million in options at a weighted average 10 cents, for a fully diluted just under 440 million. Of that, of the shares outstanding, Management and directors hold 19.3 million. That is nearly 4.9% of the total. I'd like to now open it up to questions.
Thank you, Don. Thank you, team. We will now open it up to questions. If you do have a question, you can submit them in the Q&A module at the bottom of your screen. Let's kick off with some of the questions that were submitted during the registration process. Don, with the current production issues, does the company have the required capital, required funds?
I'll have Emily answer that one.
So we have enough cash to bring Bob's short-term plan into operation. By the end of September, we will be generating enough revenue to sustain us. Additionally, we are looking at the financing opportunities that I already discussed. But Bob is working very diligently to bring us back into production. Bob and Rick are also working with their relationships to attempt to delay payment terms with our feedstock suppliers and speed up payment terms with refiners.
And just to add to that, Emily, with regards to the efforts on the additional capital, the non-dilutive capital potentially as well, and on the debt side, is that going to be earmarked, would you say, predominantly towards future modules?
The financing that we are working on are both for future modules and working capital for feedstock.
Great. Next question here is, what is your timeline for resuming full operation? Touched on this a little bit, but maybe you can elaborate.
Sure, Bob, if you'd provide additional color on our operations.
And we need all the attendees to turn their cameras on. I'm just joking, but I need feedback. I need to see people. So full operation. We're kind of in a phased approach right now. We should be producing more black powder to send out by the end of this month. And we're working on more of this modular type approach. Full-blown operations back to the 5,000 pound per day scale. It's going to take some time to purchase that equipment, but we are going to be able to run. We're going to be able to leach feedstock. We're going to be able to produce powder that we can sell and generate revenue on over the next few months.
Thank you, Bob. Does wear issue affect other sections of the module?
Don, you want me to just jump right in?
Yeah, please.
Okay. Yeah, so the wearing effect is really occurring during the first phase of our operation, the leaching step that we talked about earlier. So although the particular equipment is pretty standard in the refining industry for this acid-base chemistry, it's not ideal for our leaching step. The feedstock is causing too much wear in those reactors. As far as the rest of the operation, we can do the rest of the steps of our operation with equipment we already have in-house and other modifications. So we're sourcing alternate type reactor systems to do the leaching step that will hold up longer over time.
So, Bob, this is in relation to Module 1. Presumably, as you advance this and get it to where you all want it to be and continuous production, it should set you up for the future as it relates to future modules and future plants. So this question here, will the current issues affect the ability to expand?
Now, the current issues are just working through this particular piece of equipment. There's definitely alternate equipment out there that we can use long term. And so we'll make sure we're sourcing that correct equipment. We'll develop our pretty much blueprint for future operations, the correct batch sizes, the proper sizing of that equipment. And then we'll just be able to build, the future modules based on that blueprint.
Just a side question here. Would you say these challenges are typical during a scale-up process? And we're not talking about lab, we're talking about commercial scale-up process. In this case, 2,500 pounds up to 5,000 pounds. Is this typical, would you say?
Yes, absolutely. I mean, you need to make sure you get the right equipment. This isn't just, baking or cooking or very, benign type chemistry we're doing here, right? So this is aggressive chemistry. So you need to, as you're scaling up, you need to understand your pump flows, your flow rates, your heating time, the right equipment that's going to sustain that wear and tear. So we have the plans in place to purchase all that equipment and get the right pieces in place. But yes, anytime you're going from lab scale through to pilot scale to full operation scale, you're going to have some of those growing pains. The goal is that we get all those pieces right. We understand it all throughout this process so that all long-term growth is sustained.
Thanks. How much platinum and palladium can be derived from 1 ton of feedstock?
Tom, you want me to keep going, or you got that?
Yeah, keep going, Bob. These are in your wheelhouse here.
So yeah, so all the feedstock varies, right? It's all based on the precious metal loading of the catalytic converters that the car companies choose to put on it. It's based on engine size and all kinds of different factors that these car companies fine tune over time. So it comes down to the feedstock that we specifically purchase. That's going to vary, you know, from hundreds of ppms to thousands of ppms. And so each ton is going to be a little bit different, and we'll be pre-testing those feedstocks before we put them into operation into the plant to leach, to make sure that we're maximizing what we leach out of each batch of feedstock.
Next question here. Can you provide more information regarding Davis Recycling and their role in this process?
Sure.
Rick, why don't you take that one?
You bet. Yeah, Davis Recycle is our partners. Everyone knows. They source. They have a large network through North America and beyond to source material. They don't store and have a whole bunch of material just on standby for us. They have to go to the market and purchase it because prices change daily, sometimes hourly. So no one stores or stocks this feedstock if they're in the supply chain wanting to make sure that they protect their money. They gotta buy it, sell it as the market is prepared for. So Davis is what they do is they source material for us. We have to pay them for that material, or they pass the cost on to us at this point. Now that will change in the future as we get more credible and more in the industry and people know who we are. We'll get better terms, but we got to build that relationship. We got to build that credibility, and that's what we're doing right now. So I hope that answers the question.
Thanks, Rick. Can you provide additional details regarding the status of NDAs?
Sure, I'll take that one. So what we saw in the questions is some confusion on exactly what these NDAs mean. The NDAs we have in place are what Rick was going through his presentation. We have NDAs with various groups in those different supply chain pieces that we're working together with to build long-term relationships. Part of what the NDAs are is that they are wanting to ensure that we are operationally consistent and ready before they're ready to commit to signing any agreements with us. So it's not a magic bullet on different production pieces. It's all a continuous relationship. It's a building of the trust. It's a building of what the commercial relationship is going to be. And so we're entered into these NDAs with these groups to build our future supply chain network.
Makes sense. Thank you, Don. Got some other questions here. Is Regenx pursuing carbon credits?
So carbon credits is a long-term strategy of ours. It is not the short term. They only make sense once you have a consistent and a substantial production facility going, and you need a historical baseline to build from to be able to deal with the groups that do the auditing for carbon credits. So it's a long-term piece of our business model, but it is something that is not the short-term focus.
Thanks, Don. Next question here is, can you
add one more point to that for the team?
Go
Just
ahead,
to give
Bob.
a little additional information. I do have a lot of background on sustainability and sustainability initiatives through Heraeus and Johnson Matthey. So we will be thinking about sustainability also as we develop our plants and our processes going forward. And just want to, and with that comes the carbon credits and everything else around that. So sorry,
Thanks, Bob.
Yep.
All good. Don, can you provide additional information on the status of the Spanish mining asset, a non-core asset of Regenx?
So Trevor had it right. The Spanish asset is a non-core asset. We are not looking to move that forward. We are looking to sell that to a third party. The transaction that we had hoped would work fell through, and we took back that asset to look at different alternatives for the sale of it. We are not spending money on that. Very limited. In the last quarter, we spent $10,000 on it. This is not something we are developing. It is not something we are spending on. It is something we are looking to divest ourselves of in the most economical way.
So, Don, would you say that it's safe to say the proceeds from a presumable sale of this non-core asset would be re-injected into the growth of your flagship Module 1, Module 2, and so on to continue to increase revenues on on its flagship operations?
Yes, that's correct. But I don't want to leave the people with an impression that we believe that there will be a substantial sale price on this. We don't necessarily see a large return on that asset. But no, we are focused on our core business, the flagship, the Module 1.
Great, thank you. So recently there was an announcement that the company sold some black powder to Heraeus. I think it would be helpful for the audience to better understand who Heraeus is and the relationship that you guys have with them.
I guess Bob would be the best one to answer that question.
So Heraeus is a precious metal refining and catalyst company in this industry. So if you look at the big players in the industry, you're looking at the Johnson Matthey's, BASF, Umicore, Heraeus, are pretty key players globally. Heraeus is historically primarily known on the refining side of the business and wasn't as strong historically on the catalyst side of the business. So again, what we're doing is basically refining, so it's the better fit. Heraeus is the company I worked for the last 5 years. They're almost 300 years old from their evolution in the industry. They're a German-based company. In the US, they have assets in Wartburg, Tennessee, and in Santa Fe Springs, California, that can take these materials, process them, and purify them for us. Yeah, I think that's basically the big picture of it. If there's additional questions, please put them in the comments.
Got it. So looking to increase your relationship with Heraeus, a well-established, respectable name in the industry, along with others. Thank you, Bob. Why is Regenx focused on diesel silicon carbide catalytic converters versus other types of converters? And is there enough feedstock on the diesel catalytic converter side?
So do you want me to keep going, or do you got this one?
We'll let Rick give a little bit on this one.
Okay, go ahead.
Sure. Yeah, we're focused on diesel silicon carbide because when we started this whole business model, there was a challenge with refineries accepting silicon carbide diesel catalytic converter material. So we became the solution. That was our goal, was to become that secondary processor to work and complement the refiners, take that material because the feedstock was readily available. There is a lot of feedstock on the market, but it's time to time, and you just got to go out there and get it when you're ready to have it, and purchase it at the best pricing. So yes, that's why we focused on silicon carbide. Can we do other auto cats? Well, we can, but our process is really very, very solid on the platinum palladium side of things. The rhodium we're still working on a little bit to recover the pure rhodium, and that's mostly in auto cats. Silicon carbide has predominant platinum palladium. Bob, did you have any feedback or any comments that you wanted to add to that? That's probably covers that off.
pretty much covers it. The platinum and palladium needs to be our primary focus right now. And just a little more depth on that, rhodium follows a totally different refining process on the back end part, even after we would leach it out of our material. So we need to, focus on this for now and see if that's part of our future growth on the rhodium side.
Thanks, guys. Okay. Going back to another question on the financing front. So to clarify, perhaps Emily, the current issues should not hamper acquiring financing options or at least pursuing those financing options as long as there's presumably some revenue coming in or produced. Is that accurate to say, or perhaps you would be able to elaborate on the process?
No, that's 100% correct.
Okay. Thank you. And on that, the ideal scenario or type of instrument, I mean, this is more of a non-dilutive type of, initiative here. There are concerns from, existing legacy investors as it relates to rights offering or equity type of components. Maybe you can elaborate on that front as well.
There are no plans, I can see the question, for another rights offering.
Okay. Thank you, Emily. Okay. Sifting through here. All right. Well, it looks like the questions have all been addressed in the prepared remarks and in various other questions that we've covered today. So what I'll do is I'll wrap it up there, and I'll put the ball back in your court, Don, for any final comments that you'd like to leave investors with.
Sure, thanks. I would like to leave the investors with the knowledge that we have built a great team, that we have all the pieces that we need to move forward. We're excited. We're energized. We believe in this. Our structure is set up for future success. We've had some setbacks, but we also know how to move forward from them, and we will continue to move forward from them. We know that you'd like more information, but understand that we are limited both by competitive and by regulatory restrictions. Even us saying that a glass line reactor caused issues, that leaves a little bit of a roadmap for people behind us. We want to be transparent to you, but we also don't want to give free information to the world. We're striving for better returns from our operations, and with that and moving forward, we see share prices and those increase. I thank you for your time. I thank you for your support.
Thank you, Don, and thank you, team. Exciting update here with regards to the recording that will be emailed to all subscribers and registrants, and it'll also be posted on the company's website at regenx.tech. If you have any additional questions that have not been submitted in the Q&A module here or has not been addressed, please email investors@regenx.tech so management can review and respond to accordingly. Again, that's investors@regenx.tech. Thanks again. That concludes today's presentation. Hope you all have a great rest of your day.
Thank you all. Have a great day.